Hey everyone, this is Ryan B with Practical FX Trading. Welcome to the Aussie dollar US dollar weekly analysis for the week of 12/29/2019. And hey, if you want to make sure you stay up to date with all of our currency pair updates, make sure you subscribe to our channel. Right in the right hand bottom corner of the screen, you'll see a red subscribe button. Click that and you'll get notified every time we put a new analysis video out. You can also subscribe to our Aussie US dollar playlist, which has videos exclusively about that pair. So make sure you sign up for that. We're looking at the weekly chart here, and last week, real big surprise, the Aussie dollar kind of broke out of this long descending trend channel. Look at this, goes all the way back for a couple years there, and we see that price really plowed ahead and pierced through this 50-week moving average. However, this is one of those low liquidity weeks. Not a lot of central bankers, so there's a lot more private just FX traders. So the question is now, is price going to stay, right, sustain? If we look in the bigger picture, this 70-cent line historically has been some big support and resistance. And we see price approaching that, piercing through this 50. But now the question is, will prices plummet right back down below here and then continue its path downwards? We did see, though, the U.S. dollar under a lot of pressure last week. So the question is, were people actually selling dollars, or were they just not buying them, right? Because all the central banks were closed. So let's go ahead and zoom in closer and look at our weekly pivot points. So when I look at my pivot points, that means that these are places that price could go based off of last week's price action. This is what I'll look for, is price to visit the pivot point sometime during the week. So I'm expecting 69.54 to visit. And even if I'm bullish, I could look for price to come all the way back down to weekly S1 before it continues back up, right? Because every time that price gets a little bit too far ahead of this fast moving average, the next thing you'll see is that price travels back down to it. So, right, perfect example, we look on December 10th or the 11th, price shot away from the moving average, made a big spike up, then quickly returned, consolidated before shooting up again. So even if I'm looking to buy, I'm going to wait. I don't want to buy at the top. I'm going to buy the dip. So I'm going to wait for it to come back down. Or if I'm looking in the big picture and I think this is a great opportunity to sell, this is one of those historical peaks where price, kind of pushes through the moving average and quickly retreats, then, this might be a good opportunity for a sell. However, a better sell would be if I waited for price to reach weekly R1. Because it has that potential, and right now I'm kind of just floating in the middle of the zone. That's a place I don't want to get into trades. So even though it's tempting, I don't want to get into a trade in the Sunday afternoon while price really hasn't kind of visited one of these waypoints yet, because that means that price more than likely isn't going to stay here, and I will get caught into a negative holding. So even though I may ultimately win the trade, I don't want to have it sitting in limbo for days and negative and red in my account, right? That doesn't help with my trade confidence, my trading psychology. So here's me on the Aussie dollar this week. I'm waiting to see what happens. I'm going to wait to see if it kind of travels back down below this pivot and then continues down, or if it consolidates and then continues to move up. Let's go ahead and look at the 4-hour. And look at that. Look at that, the angle of that trend line. So one thing I know, that's not very sustainable, but that definitely is pretty bullish. So let's go ahead and lay this parallel trend channels out. So in the short term, this might make a good buy. Let me clone this. The reason I want to clone my trend lines on building a trend channel, so I want to make sure that the angles are the same. Right, so I think of trend channels, descending and ascending, as horizontal support and resistance zones over time. So that's where the angle comes from, because they're moving over time. So this is pretty interesting. This shows a really good support zone. So one option is, if I'm feeling very risky, I could sell this back down. But it's looking like in the short term, this price, once returning here, will make another attempt for that $1.70 line. So, or the 70 cents, pardon me. So there you go. Once again, if I'm going to sell, I'm going to wait till the price gets a little bit higher, put that sell on. Just look at this giant bullish candles, 4 hours, really taking off. So be careful. You know, the trend is your friend, as they say. I don't really want to get in front of that moving train. And I don't necessarily want to sell it because I don't think it's the ultimate top. And you can lose a lot of money trying to guess the ultimate top, you know, and trying to sell. Sometimes it's better just, especially if you're day trading, you want to go with the short-term trend. So let's go ahead and pull that out here. But we see historically, you know, this has happened before. If we look back, we see that price can go above this trend line for a couple days and, you know, really push as we get these big shadows on our candles, and then continue back down. Also, the fact that price moved above the 200-day moving average, that makes me bullish overall, but is it sustainable? Because we see something like this, all right, and then quickly, back in mid-July, price just catapulted down. Sometimes these big rallies make the best sells. So I'm going to wait and see, wait for price to reach 70 cents, or if I want to go bullish in the short term, I'm going to wait for price to return to the weekly S1. And wait for price to hold above this line. That's really, see how these candle bodies close below it, right? Back historically, we look at the 69-cent level. Price closed above it. These candles, but even though they tested the line, they would close above it. Now here we hit a bullish breakthrough and down. Here we hit a bearish breakdown and down. Here we hit a bullish breakthrough. But now I really want to see what's going to happen. So if I have a couple candles that just moderately coast back down, my moving averages catch up, and now my price is on top of my fast, medium, and long-term moving averages, then I'm definitely bull. So lots of interesting price action coming up for the Aussie dollar in 2020. Stay tuned, and make sure you catch all of our other currency pair analysis for this week. All right, happy trading.